It was a wild week last week. We got Frank Holmes and Gold Game Film coming up to set up this week. Frank, thanks for joining me.
It's great to be here.
All right, Frank, let's get started with last week's FOMC meeting. What did you make of gold's action after the FOMC minutes became public?
Well, I think there's still this wrestling match. It's not just gold and the dollar. It's the gold, the dollar, the euro, and the yen. And there's a triangle here that people have to be cognizant of because gold is very strong in euro terms and very strong in Japanese yen terms. And it's been weak until this week in dollar terms. So I think what we're witnessing is sort of high frequency trading you can think of between the three currencies, and the fourth currency is gold.
All right, Frank, shifting over to opportunities and threats. Let's start with opportunities. And you're seeing some opportunities with the US dollar right now, right?
Well, last week we were commenting that there was a crowded trade. Everyone was long the dollar, and we saw redemptions for many weeks in a row out of the GLD. And there is a trade that goes on between the dollar and gold. And now, all of a sudden, we got caught offside for the dovish meeting, and we see rates have fallen. What's important for investors to look at is what CPI numbers are. So it's real interest rates. And as long as the real interest rates are negative in Europe, negative in Japan, gold is going to do much better in those countries' currencies. We still have positive rates of return in North America.
And another opportunity is with Greece this week. Do you think markets are going to be watching this closely?
Well, I hope the Greeks are buying lots of gold and silver and putting it under their trunk, because the credit default swaps in Greece are reaching record levels. In fact, they're spiking. Well, but Russia are falling. Ukraine are falling, but Greece is rising. So the world is worried about Greece. And bonds, you get yields over 11%. It's amazing in the euro that you go to Germany and they're negative with 1% or no percent returns, but in Greece it's double-digit numbers. So there is a great concern, and any unraveling of Greece would have positive ramifications for gold.
Yes, I like how you said the Greeks need to be buying their own gold. Moving to threats now, we're going to talk about the US dollar. I know we said that the scale back last week was an opportunity for gold, but analysts remain bullish on the US dollar. Is that what you're seeing?
Well, the CPI will be quickly calculated. It's expected to be still negative number in America on a year-over-year basis of minus 10 basis points. And that would mean that the 5-year government bond, the 2-year government bond in the US, and the 10-year all have nice positive returns versus Europe and the Japanese yen. So the dollar will remain, on relative to those other two dominant currencies, very strong and attractive. And I think on a sequential, though, on a month over month, we're going to start seeing it rise because gas pump prices are starting to rise. So I think that's where we're going to see the gold is not going to get clobbered with that.
Frank, what's your touchdown pass for the week?
Well, this touchdown pass is it's going to be PMIs. I like to talk about Purchasing Manufacturers Index because it's forward-looking. And that number is very important. The global PMIs turned positive, and then we saw a bottom in many of these commodities. I think that that's important, what takes place. It comes out Tuesday along with the CPI. So we have lots of data points that can create the volatility in the overall markets. But I think that PMI, the 1 month globally, last month did turn above the 3 months, which is very constructive for global growth.
Frank, thanks for joining us.
Happy investing.